Today, I'm ranking every major investment across the following points to determine what I would recommend. This can be for complete beginners or current investors. The problem is that some of these are completely overrated, but some of them people don't talk about enough. So today I'm ranking them on the following parameters: rate of returns, risk, passive income, time required, barrier to entry, and scalability. And then for each of them, I will suggest who this is best for. First on the list, we've got gambling. Now, this shouldn't be taken seriously. Gambling has fantastic returns, but people need to realize this is the worst you can do. You're better off just holding cash. I'm not even going to rank the metrics for this one. It should just be avoided at all costs. It's high risk and it causes the most losses out of anything on the list. F tier. Next up, we've got currencies. Now, currencies, I'm giving 6 out of 10 for returns. And the reason I'm doing this is because currencies is a commodity that's traded much like a stock, be done with a broker on an exchange, and you can trade short or long positions. And while yes, it has the potential to yield 10 out of 10 returns, you can 1000x an investment if it's the right currency. Look at the Iranian rial when the war broke out. It's almost impossible to predict these things. Sometimes it's either gambling or it's very, very difficult to get a hold of the information to make a good trade like that before it actually happens. And becoming well informed on these things is very difficult to get good information. On risk, I've given it a 1 out of 10. It's really, really difficult to do well. It's similar to trading penny stocks. Lots of people suggest that. I don't. But yeah, because they're so volatile, they are very risky. Passive income, I've given a 3 out of 10. If you hold longer positions on a certain strategy, you can leave it and it requires no time. It's not ideal. It's probably not the best strategy for trading currencies. Time required, I've given that 1 out of 10. You need to be constantly researching. You need to be finding up-to-date information. You need to be looking at the news. You need to be practicing, refining your strategy. None of this can be done passively. Barrier to entry, I've given 7 out of 10. And this is because all you require really is internet, a good device, and a broker to trade with, which isn't too bad. Most people can get access to that. So I've given it 7 out of 10 for that. Scalability, I've given a 9 out of 10. It's really good for this sort of thing. You'll see that across lots of the commodities that are traded on exchanges like stocks, cryptocurrencies, whatever. You can just trade as much as you want. You can put in a fiver, you can put in £5 million, whatever you like. It should be noted they've got very different types of strategies. Lots of people will recommend different things, and they work in different economic conditions in different parts of the world. But because the risk is so high, I'm putting it D tier. Next up, we've got cash. Now, when I say cash, people usually think of either holding physical cash or putting it in the bank. I'm referring to putting it in the bank. Now, cash returns, I've put 1 out of 10, more than 0, obviously, but you will just get at most a couple percent. You can get a good like ISA, or a Roth IRA if you're in the US, and look at cash where you can get a small return on it, but it would never be a large return. It will work well if you have a large amount of cash, but for small amounts, it won't yield much. Risk, I've put 9 out of 10. Cash can be dangerous because currencies do move around, but in the grand scheme of things, it's pretty safe. It's a lot less risky than some of the other options on the list. Passive income, I've put 8. If it's in the bank, you don't have to do anything. That's brilliant. You just sit there and watch it. Time required, I've put 5 out of 10. And the reason I've put 5 out of 10 is because it could be a 10 if you're already sat on a lot of cash. But if you don't have any, you're not going to make any money. So you've got to put the time in to get cash in the first place, which is why cash shouldn't be seen as your sole means of income. You should have a job or something else unless you're sat on a lot of cash. And you'll see that as a theme throughout lots of these. They shouldn't be taken on their own. They should be combined. And we'll get more into that later. Barrier to entry, 10 out of 10. Cash is one of the easiest things to obtain on this list. Therefore, everyone can do it. Scalability, I've put a 2 out of 10. It's not kind of like a business model with exponential growth. Obviously, it will compound interest, which is great, but you'll always be beaten out by inflation, which is a problem. So most currencies do not increase in value at the rate of inflation, which means their effective value doesn't actually really go up. So the only way to kind of win against that is have a large sum. And obviously you're not holding cash if you've got a large sum. So I'm putting it in D tier. Next up, we've got gold. Now for returns, gold, I've put 5 out of 10. It does yield some pretty good returns. And obviously we can see that it's yielded very good returns in the last few years. But in the grand scheme of things, it's not exponential returns. You know, it's still quite a solid investment. And who knows, it might not continue to go up. It's very hard to say in this current climate. Risk, again, I've put 6 out of 10. Gold is a relatively stable asset. It's not as stable as, say, cash or property, but it's pretty stable. Passive income, I've put 6. It is one of those things you can look into doing different trading strategies, shorting it, long positions. You can leverage trade on gold, but it doesn't require too much time. Time required, I've put 10 out of 10. Again, anyone can trade this, not particularly difficult. Barrier to entry, 9 out of 10. Again, all you need is similar to the currencies option, is you need a trading account, a broker, and internet connection and a device. And then finally, scalability with gold, I've put 4 out of 10. You can obviously scale it with a large amount of money, but it is better than cash. It should be noted that you can leverage trade with gold, much like lots of the other commodities, whereas it's not really a thing with cash. I'm putting it in C tier. Next up, we have commercial real estate. Now, commercial real estate, I've put 6 out of 10 on returns. Commercial real estate is a very interesting one. There's lots of different ways to do real estate. We're looking at just commercial for this one. The tenants are different. You know, you're working with companies, not people. Margins can be good if you're providing good value. Say, warehouses will have a very different value proposition to a family home. For risk, I've put 8 out of 10. So if you own the freehold on the land and the building, these things don't tend to go down. They tend to be pretty stable, and then you might see a nice appreciation as well. So they're not too risky. Passive income, I've put 6 out of 10. The only reason being is, yes, you'll see a consistent income stream and a consistent appreciation, but you do need to manage the relationship with the tenant. You do need to keep in mind that you've got to put time into maintaining the building and taking care of it and looking after the marketing for finding a good tenant in the first place. So it's not a 0 time thing. Time required, I've put 8 out of 10. Once you have found that good tenant, you know, it doesn't take much time at all, and you just have to do scheduled maintenance. So lots of time up front, maybe not in the long term. It's difficult to say depending on the circumstances. Barrier to entry, I put 2 out of 10. These can often require a lot of upfront capital. It's quite difficult to get into. You can make it easier on yourself by financing, so having a large mortgage, but that will still require some sort of deposit. Most parts of the world, that would look like a minimum of 5 to 10% of the property's value. Scalability, I put 5 out of 10. You can scale it infinitely, which is fantastic, but it will just take a lot longer. You've got to build those relationships with the bank. It's not as exponential as some of the others on the list. A bonus of it is less competitive than residential. I'm putting it in C tier. Next up, we've got IPOs. Now, IPOs stand for initial public offerings, and this is when a company goes onto the public market as a stock for the first time. So for returns, I've put 8 out of 10. The reason is the upper potential for this is almost infinite. You know, IPOs could soar in value. However, that means that risk, I've put 3 out of 10 because they could go up, but they could also go down loads, depending on the company. So you've got to put the effort into the research. And as a result, I put passive income as a 4 out of 10 because you may think it would be a 10 out of 10 because you buy the stock or short the position or whatever it is you want to do and just wait. And that's true. But up to that point, you've got to do lots and lots of research. And if you don't do research, then it just makes it more risky. So time required, 7 out of 10. As I say, you have to put that time in to start with. But then once you've got your position, you just watch. There's not a lot for you to do. Maybe you've got stop losses in to minimize your stop. And so that, again, will do that for you. Barrier to entry, 8 to 10. Again, it's anyone with an internet connection, a good device, a brokerage, and a way to trade. And then scalability, I've put 5 out of 10 because it can be quite risky to put a large amount of money into an IPO, especially if you haven't done your research and you don't know what's going to happen. You have to wait for a good IPO to come around. It's not something that's constantly available. So I've put IPOs in the bottom of B tier. Next up, we've got residential real estate. Now, residential real estate will share obviously a lot of similarities with commercial real estate. Returns, I've put 5. Now, you'll notice commercial, I had 6. That's because the value provided can be less. It depends on the deal. All of these things can be adjusted depending on your circumstances. Risk, I have put 6 out of 10, which is obviously, again, lower than commercial real estate. That's because the tenants can be harder to deal with. You know, lots of people see housing as a right, which is very common and reasonable. And as a consequence, you've got more of a responsibility to uphold conditions, you know, the boiler, the electricity, the heating, and all of these things, and the appliances to deal with. Whereas a warehouse might be a bit easier on maintenance. So as a risk, you could have a dodgy tenant that makes all of these things expensive and difficult and wasting your time. So yeah, it's a lot harder. And as a consequence, passive income, I've put a bit lower than commercial as well at 5.5 out of 10. Because again, you need to spend more time maintaining the property and it can be harder to find a good tenant as well. Another thing to note with residential real estate is that people tend to move houses a lot more than businesses tend to move locations. So you'll be spending a lot of time, again, looking for tenants and a lot of downtime where there won't be someone living in your home. So you'll have no income for those months. Time required, I've put 7 out of 10. Again, you need to put in lots of time to start with and getting good tenants. But once it's up and running, not too bad. It's not a full-time job, depending on the amount of properties you have and what you're dealing with. Barrier to entry, I have put 3 out of 10. It's a bit better than commercial just because the prices tend to be a bit lower, which is worth noting. And scalability, I've put 6 out of 10. The reason for 6 out of 10 is it's quite easy to, as a landlord, scale and get a relationship with the banks compared to commercial because the prices, again, are a bit lower, but it depends on the circumstances. I'm putting residential real estate in B tier. Next up, we've got silver. Now for silver, you can almost see it as like a flip to gold, you know? It's a very, very similar asset. For returns, I've put 6 out of 10. This just depends on the circumstances. Silver's been booming at the moment. Gold has boomed in the past as well. It just depends on when you're watching this, really. So always do your research. Risk, I've put 6 out of 10. Similar to gold, it's a commodity that can go up and down. Really depends on the circumstances. Now for passive income, I've put 7 out of 10. Again, it's just a consequence of volatility and your positions and what you want to do. If you're just buying some, holding on to it, not doing anything, then that's great. It's pretty passive. Now time required, I've put 9 out of 10. Again, once you have your position, there's not a lot to do really, which is quite nice. And barrier to entry, I've put 9 out of 10. Again, same as the others, just need a internet connection, a broker, and a good device. And then scalability, I've put 4 only because the rate at which it increases isn't as exponential as something like a business. It can be exponential, but not like a startup stock, stuff like that. So that's worth noting. And again, it is very similar to gold. So perhaps you could use silver and gold as a combination to kind of diversify your portfolio. And we'll get into that more later. I'm putting silver in B tier. Now, cryptocurrencies. This is an interesting one and quite a hot talking point. Returns for cryptocurrency, I've put 9 out of 10. These things can absolutely soar and make a lot of money, especially when leveraged, but as a consequence, it's very, very risky. So I've put risk, put 2 out of 10. Now passive income, I've put 6 out of 10 only because, again, once you have your position, there's not a lot to do, but it requires even more research for crypto. And then I've got 7 out of 10 on time required. Again, you need to put in your research. 10 out of 10 on barrier to entry. Again, anyone can do it. And it's actually quite easy. You can even trade crypto offline using, wallets and trading with other people. It's a currency at the end of the day. And then scalability, it's pretty good. I've put 8 out of 10. It should be noted that single currencies on their own are very volatile. And this is where that diversifying comes in. Holding different coins can protect you in a sense because it means one loss does not wipe you out. I'm putting crypto at the top of B tier. Now we've got land. Land's a very interesting one. So returns, I put 3 out of 10 because if it's just land on its own, the only money you're making is from appreciation. But you've got to remember that you can use land with business, with tenants, whatever it may be, to make even more money on top. So I've put 9 out of 10 on risk. And this is because land historically never really goes down in value. You'll have crises where it might not look so good, but it's a very, very stable asset. And I've given it 6 out of 10 for passive income. It just depends on what you're going to do with it. If you're going to sit there just for the appreciation, then there's not a lot to do. But again, you could have tenants and a business, and that could take a lot of time. So 5 out of 10 on time. For barrier to entry, I've put 4. Again, the prices are quite high. You've got to negotiate with banks, get a mortgage, finance, whatever it may be. And then I've given it 5 out of 10 for scalability. You can scale it to the moon. It just might take a while. But I've put land in A just because of how stable and historically quite a safe investment. On its own, it does not generate active income, only appreciation, but you can combine it with another later method we'll talk about to make it S tier. Next up, we've got stocks. Now, stocks are given 9 out of 10 on returns. Fantastic returns on stocks. You can see startups soar and 1000x, but as a consequence, the risk again is pretty high. So I've given it a 2 out of 10 on risk. And then 5 out of 10 on passive income because you can have stocks that pay dividends and you can have more stable stocks. So again, it just depends on your strategy. I've given it an 8 out of 10 on time required. It just depends on your strategy, how much you're going to research it, how long of a position you want to hold. And then I've given it a 9 out of 10 on barrier entry. Again, copy paste, same as the others that you trade commodities. And scalability, I've given it a 9 out of 10. You can really get exponential gains compared to cash on stocks with a larger amount of money. I'm putting stocks in A tier. Now, index funds. I've given index funds a 7 out of 10 on returns. Not quite as volatile as stocks, but as a consequence, I've given it 9 out of 10 on risk. Because index funds hold lots and lots of different stocks into one. So you're basically buying a pie, and there's slices in this pie of lots and lots of different other companies. So if one of them goes, say you've got 500 companies like the S&P, you've still got 499 others. So you're quite protected in that sense. I've given it 8 out of 10 on passive income. You can get a dividend and you can get consistent growth, a lot safer. I've given it an 8 out of 10 on passive income and time required. Barrier to entry, I've given it 9 out of 10, same as the other commodities, but they're more readily available. And then 9 out of 10 on scalability. You can put as much in as you like, and compound interest is really effective on this one. I've put index funds in S tier. It should be noted, index funds, you can see them as a smarter version of stocks. You should keep an eye out for fees and charges though. If you've got a high fee and charge that you've got to deal with, I'd put it in B tier. Next up, we've got business. Now, business is a very interesting one. I've given it 10 out of 10 on returns. Businesses can make as much as you want, really. There's no limit on that. But I've given it a 4 out of 10 on risk because business, there's no way of getting around it. It's hard, whether you're acquiring a business or starting your own. I've given it 3 out of 10 on passive income. It requires hard work as well, unless you've got people working for you, but then it's expensive. So I've given it a 2 out of 10 on time required. Again, because you'll need lots of time if you're not hiring employees and doing it yourself. Barrier to entry, 8 out of 10. Anyone can start a business. It's one of the most accessible on the list, but lots of business businesses do require startup capital, which is why it's not 10. But then scalability, I've put 10. Businesses can grow as fast as you like. Now, business, it should be noted, it's entirely dependent on the person running it, and it can easily be F tier if it's not done right. But where it becomes really valuable, not only is it great on returns, but it can be combined with others on the list to make it even more powerful. Maybe you'll reinvest your business's profits into index funds. Maybe you'll buy land for your business, and maybe you'll buy commercial real estate like a warehouse that you need for your business. And by combining all of the things on this list, you're kind of hedging your losses and becoming a more diversified investor, protecting yourself from any major losses, which is a really, really good idea. And if you can take anything from this video, it's that by diversifying your portfolio, you can mitigate your losses.